Hello traders and welcome to another video review. Today is Thursday, March 28, 2024. Let's find out what's going on the Forex calendar today. GDP data from the UK had been the biggest and the most important data releases in the morning. As you can see, the GDP in UK is in line with the expectations of minus 0.2%. Business investment is down to 1.4%, and the current account is below the expectations of minus 21 billion pound. So we will definitely take a look at the British pound later on. Coffee leading indicators from the Switzerland are worse than expected of 102.1 with the actual number of 101.5. We are still waiting for the German unemployment change and German unemployment rate. Both of these data are scheduled for release 5 to 10. During the New York session, we got some data that are very important. One of them is GDP. US GDP is expected to be released at 1:30. Forecast is 3.2%, which is way down than the last GDP reading of 4.9%. Canadian GDP will be released at the same time as well, but there is more from the US coming during this session. Initial jobless claims, one of the most important data releases at 1:30 as well. Then we got Chicago PMI, Michigan inflation expectations, and at 3 o'clock we still have pending home sales data from the US. 3 hours later we got the US Baker Hughes oil rig count and total rig count, and at the end of the day 9:30 we got the Fed's balance sheet. So very busy New York session today, and quite busy session, London session, especially because of the UK data. So let's switch to the technical part and see what is going on the British pound. The 30-minute chart of the British pound is showing us deterioration from this zone here, roughly around 1.2637, 1.2640. We tried to bounce above it 3 times, and right now the market is approaching the lower technical support 1.2602 black line. As you remember, this black line is a trend line. On the 4-hour chart it is visible that this trend line has started at the February 5th, then the first support, then the second support, then the third support, and now it is to be or not to be for the bulls. If they bounce from it, okay, there is a chance to even to test first 1.2641, then 1.2668. However, with this negative momentum, it looks like this market the bulls will give up, and the bears will break below the black trend line towards 1.2575, and then the next technical support is located at 1.2536. So please be prepared for, let me just take my arrow, be prepared for the breakout and downside movement towards this level on the British pound versus the American dollar. Because we got data from the USA, let's switch to the US dollar, and now what do we see here is a breakout with the negative momentum, strong negative momentum to the downside below the demand zone. This is something that we expected. That's nothing new for us. Next target for the bears is 1.37 and 1.0733. There you go. That's the next target. Demand zone looks like it's going to be broken. Please notice that the market is going in line with the 50 periods moving average on a 4-hour chart. Now it's totally under the bearish control. More downside is to be expected on the euro dollar 4-hour chart. Bears are in total control of this market. Let's switch to the US dollar index to see what is going on there. US dollar index is going up. Why? Because euro dollar and British pound, for example, are going down. Possibly US dollar to the Japanese yen would be going up as well, but this is something we expected as well. Last swing high at 104.47 had been violated. Momentum is positive, momentum is strong. There is still room to the upside. Next target is located at, let me just take a look here, 104.95, and those two levels here will now act as the technical support for the for the bulls. So the US dollar index is looking very bullish, positive, strong momentum, supports the bullish outlook. We should see more upside in the coming hours whatsoever, especially if the US data will be better for the US dollar as well. So we should see even a spike higher without any problem. So let's just switch to the US dollar to the Japanese yen, because we know that it's not going to do anything for now. Quite interesting, because it looks like the US dollar is going up, so the US dollar to the Japanese yen should be following this path. However, there's nothing going on here. There's completely nothing going on here. The market is consolidating between two important levels, 150.91 and 151.98. So that's the consolidation zone, roughly around or just below, basically just below the 50 periods moving average. Momentum is quite, just barely positive, let me say. Just bounced from the level of 49 points. So maybe the dollar Japanese yen bulls are still waiting for a trigger to the upside. There's definitely room to the upside here. Definitely room to the upside on the chart as well. So we should see some sort of the upward movement very, very soon. And last but not least, let's take a look at the Bitcoin. Bitcoin has been seen moving to the upside again. So very interesting situation, because our blue horizontal line, which marks the top for the wave 1, has not been violated. Despite the fact that it was almost there, we can still say that this is the wave 4 to the downside correction. A, B, C, very nice, possibly completed, right? So there is still a chance for the wave 5 to the upside. As you can see, the blue arrow is now invalidated. Market went down towards the level of 50, which is of course the neutral level. Now it's bouncing back up. Strong momentum here, strong momentum here. We should see some sort of the test of the 71,617, then breakout to the upside. Let me just zoom out. The breakout to the upside towards the 73,859, and then possibly even towards the 75,000 tethers, as this is the next target for the Bitcoin bulls. Strong momentum, positive momentum supports this outlook, so please be prepared for another rally on the Bitcoin coming very, very soon, especially if the 1, 2, 3, 4, 5 wave impulsive cycle is the one that is correct for this rally. Of course, when we are done with this impulsive rally to the upside, then the market should do some kind of a ABC pullback. The last pullback or correction, the last correction, as you can see here, was quite substantial, but it was the higher degree correction. So the price wise, it was the range of roughly 17%. There you go, 17.76%. But this is the bigger cycle. This is the completely different cycle that the one that supposed to be here. So don't it doesn't look actually like the incoming correction will be bigger than 17%. It might be, it should be way lower than 17%, maybe 10, maybe 7, maybe 8. We don't know yet, but it should be lower than 17%. Then the uptrend should be resumed again. So waiting for the completion of the wave 5 ABC correction, not bigger than 17%, and then up we go. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.